Can't do it. We'll do it live. No. We'll do it live. Fuck it. Do it live. I'll write it and we'll do it live. Fucking thing sucks.
In 5, 4, 3.
That's tomorrow.
And
That is it for us today.
I'm
I'm
Stewie
Bill
Griffin.
O'Reilly. Thanks again for watching.
We'll leave you with Sting and a cut off his new album. Take it away.
Take it away.
All right, we like to do everything live here, as you guys know. Welcome back, Everlong, Rachel, Black Widow, Paul, Quant, William, Airplane Mode. All right, my friends, here's what's going on. We're going to talk about quite a few things. All right, we're going to be jumping around between Donald Trump, inflation, housing, jobs, everything going on in the current administration. Jim Cramer, the inverse Cramer effect. So let's not waste any time. Donald Trump rang the bell at the NYSE today, which was absolutely epic. And I'll show you guys exactly what I mean. And then I'm going to explain to you how the hell inflation went up this month by 31%. That's not a I didn't misspeak. You heard me correctly. Inflation for the month of November alone, not year over year, but month over month, has gone up 31%. Right after this, everybody started chanting USA, USA, USA. I can't believe I didn't give that a like. Let me give that a like there for Kobasai letter. Check this out, you guys. We're going to get back to Jim Cramer, but I need to show this before. To show you, because these people on the news are finally catching up to the things that we've been saying for 3 years now in regards to inflation. They're finally starting to open their eyes, because it seems as if the real numbers are starting to slip out.
Lindsay.
Yeah, so...
Okay, I have to interrupt. For some reason, I've never seen this before. Finished consumer foods, crude, up 31%, month to month, if I'm not reading this wrong.
Finished consumer crude.
I don't even know what that means, 31%, if that's a misprint or something, but other things are up 3%. I get that that's hot. But this finished consumer foods...
What is that?
I don't know.
It's everything.
But it's up 31%.
I don't even know what the category is.
I've never seen... There is no other number in here that's even double digit.
Well, you'd still cut, Lindsay?
I would say as somebody who doesn't cook, I can probably validate that number, that things that become packaged and arrive at the house and go in the microwave are up. I think that's fair. Whether they're to that degree, I can't attest to that. But we very much believe that the Fed wants to cut it.
Lindsay. Oh, they are going to cut. And I went ahead and did some homework for you guys. And I'll pull it up to you right now on the Bureau of Labor Statistics. And that literally shows you that all foods are finished foods. Pretty much anything you can eat or drink is up 31%. Specifically here, you can see fresh fruits and melons are up over 23%. Fresh and dry vegetables. So that means it doesn't matter if the fruits are fresh. It doesn't matter if they're, dehydrated. But any vegetables basically are up 33% month over month. And this is from the U.S. Bureau of Labor Statistics. All right, check this out, guys. You can see here the U.S. Producer Price Index. The U.S. Bureau of Labor Statistics revised last month's inflation from what they claimed was 2.4% last month to 2.6% now. And core PPI, which is the core producer price inflation for October, has been revised higher from 3.1 to 3.4%. This means that 6 out of the last 7 inflation reports have now been revised higher. This is par for the course for the Biden administration. Today, there was a 3.0% PPI inflation print, which means that PPI inflation is at the highest level that it's been since February of 2023. We've been telling you guys that there's a resurgence happening, And CPI, PPI, and PCI are all increasing. That means what you buy at the store, what companies are producing, and what companies are importing is all increasing in prices. So take a look at the Bureau of Labor Statistics. Whoops, I didn't mean to click that. Here we go. Let's type in finished so I can show you guys what the finished foods are. Finished consumer foods are anything that is ready to be eaten, whether it's processed or whether it's raw, like vegetables or fruits, or if it's processed, like dairy, eggs, ham, cheese, etc. That is what finished consumer foods means. And as I just showed you guys here, here is the PPI for final demand components. Right, 1 month percentage change for the month of November 2024. And you can see here, if you don't want to look on the screen, but I'll tell you, it says the source is the U.S. Bureau of Labor Statistics. And this shows that in aggregate, in total, the average increase in inflation for foods that are ready to be eaten is 31% for the month of October alone. You can see here the PPI for final demand on a 12-month percentage change is the red bar. We were at, in 2022, 11.7%. It got down in June of 2023 to as low as 0.3%. Now, that means the price is still going up by 0.3% year over year in June, but that's better than the 11.7% that it was a year earlier. Hey, Gary, welcome to the channel, my friend, Gary Penright. And what we're looking at now is June 2024 was at 2.9, drop at 2.4, drop at 2.1. And as we told you guys, inflation was going to keep going higher. September 2024 was 2.0. October, it was revised from 2.4 to 2.6. And you're looking at it now, November 2024, 3%. This is for all of PPI. This isn't just for the food, the finished consumer foods that I showed you guys here, which was 31%, 33%. But this is just for the producer price index, the cost to make goods. The PPI for final demand, 12-month percentage change, not adjusted seasonally, increased 3.0%. We are seeing a massive resurgence, a massive uptick in the cost of foods. And I was wondering, I literally to my daughter said yesterday, I'm not exaggerating, I'm not bullshitting. I said, how the hell are eggs $5 a dozen for the regular white large eggs? We were literally at the store yesterday, and I said that to myself. I was like, they were just $339-ish, $340 when we went shopping about a week and a half ago, because I got a family of 6. We literally buy, 3 dozen eggs every week. And I'm not even exaggerating, like literally 3 dozen eggs. And we get the brown ones usually because they have more nutrients, right? And they're free range, whatever. But just the regular white eggs went up from $340 to $498 yesterday. When I looked at it, I'm like, how the hell did the price of eggs go up to this cost overnight? And now it makes fucking sense because the BLS numbers, Bureau of Labor Statistics numbers, for finished consumer foods for the month of November came up today. The PPI numbers, the CPI numbers, the PCE numbers, and they came in fucking hot. I mean, hot as hell. This is not unexpected per se here on this channel, but this is much worse than even I anticipated for a 1 month change in inflation of the cost of food. Take a look at the price of live cattle. This is the live cattle for December of 2024. It is at an all-time high, ladies and gentlemen, all-time high. What does this mean? Hey, everything else is going to be more expensive as well. Whether it be the meats, the ground beef, you name it, the sausages, the hot dogs, it's all going to be more expensive. Look at Jim Cramer. I'm going to go back into inflation and housing here shortly, but I want to point this out to you because I thought this shit was hilarious. Trump just roasted Jim Cramer on camera for his massive L's. Check this out.
Going up and going down, but you always end up. He always ends up. That's the good news.
I know you've got a ton of things to do, but what can you say to the working person who owns stocks? Should they buy more stock?
Well, I don't want to get into a situation where they do and we have a dip or something, because that can always happen. You know that better than anybody in the world, probably. I think you're the leading authority in going up and going down, but you always end up. He always ends up. That's the good news. But we have, like, Doug Burgum standing right over here has done a fantastic job. He's been on your show many times, and we have just tremendous people. I would say this, I think long term, this is going to be a country like no other. We had the 3 best years ever until COVID came in, and then we did a good job getting rid of it. The stock market, if you look at the markets, were higher than just previous to COVID coming in when we handed it over. And now
I know
he literally told him, I don't want to get into a situation where people buy stock and we have a dip, because that can always happen. And he told Jim Cramer, you know that better than anybody in the world. You're the leading authority. He called him out, plain and simple. He also mentioned specifically cryptocurrency and a strategic reserve for cryptocurrency. Listen up.
You're embracing crypto, very different from the previous administration. Strategic Petroleum Reserve, like, for crypto?
Yeah, I think so. We're going to do something great with crypto, because we don't want China or anybody else, and not just China, but others are embracing it, and we want to be the head. We're going to be ahead of AI. We're going to be way ahead of AI, and we've got to produce tremendous amounts of electricity. You know that. It's unbelievable when you think that we need more than twice what we already have. If you think that's pretty for a specific industry, but we'll be able to do it. We have Lee Zeldin in charge of the environment. He's going to be giving us very strong approvals, I think, and he's going to make sure everything's good and clean and proper, but he's going to give us very fast approvals.
Natural gas, you're embracing crypto.
Very bullish for cryptocurrency in general and for the United States. This is something that it's a whole nother asset class. And right now, a lot of financial markets, all of the markets in general, are overvalued. But the fact that we have a president that's actually willing to allow cryptocurrency to grow and not have a Securities Exchange Commission chair like Gary Gensler, who's constantly putting his foot on the neck of everybody trying to buy and issue cryptocurrencies, is absolutely bullish for this economy, in my opinion, and I think for many others as well. Huge shout out to channel members, Typo Negative, Badonkey Kong, Tyler, Google Forces Account, Instinctual Trades, Fugazi News, Samony, Whopper, Zelly Zen, B-Rye, George, Sirhan, Lag Throne. Appreciate all you guys and gentlemen, all you ladies and gentlemen. Check this out. We now have Zuckerberg, the one and only, jumping on the bandwagon. And even Jim Cramer, who just got roasted by Donald Trump, is calling out Mark Zuckerberg for jumping on the Trump train. Because in my opinion, I think many people here watching this channel are very understanding of just how much fake news was pushed by Facebook and Meta and Instagram and all of Mark Zuckerberg's channels.
The oil and gas business. I would just say, listen, we're not taking your call. We're not interested in you. Those people have done a 180. Actually, there are a lot of people who were quite silent during President-elect Trump's run, who now are very much on board. Very interested.
You mentioned a fella named Zuckerberg, maybe? Is that what you're thinking?
Well, I don't know his politics, but I'm just saying that suddenly every business person is saying it's a brand new dawn.
Meta today did say they donated $1 million to the inaugural fund. He actually breaks a lot of news in the Time interview, Jim. He says they're going to look at ending childhood vaccinations, depending on what RFK wants to do. He's asked about war with Iran. He says, quote, anything can happen. Says that he's not averse to using the military to round up and deport militants in the oil and gas.
Yeah, no, I mean, did he give him a compliment? I mean, he literally told him that you know better than anybody in the world about giving people financial advice and then watching the stock fall afterwards. And he called him the leading authority of that. I would hardly call that, a pat on the back. He was throwing jabs at Jim Cramer right out in the open. And Jim Cramer was swooning over Donald Trump. Citadel Securities floor traders on the New York Stock Exchange were swooning over Trump. This guy, I don't know if somebody put him out there to, try to relate to Trump. But let's put it this way. I got a video right here that shows just how much Trump knows about Ken Griffin. But, of course, his floor traders at the NYSE were telling him, you're our guy, over and over again. In my attempt, in an appeal to his better nature.
He's trying to hide it. Ken Griffin.
Oh, Ken Griffin.
What a guy he is. Where are you, Ken? Where the hell is he? He's trying to hide some of his money. Look, he doesn't want to stand up. Where the hell is Ken? See, Steve, you'll stand, and he's very quiet about it. He's in here someplace. He just doesn't want to stand. Ken Griffin, Citadel. What a guy he is. Where are you, Ken? Where the hell is he? He's trying to hide some of his money. Look, he doesn't want to stand up. Where the hell is Ken? See, Steve, you'll stand, and he's very...
Yep, Ken Griffin did not want to show face here.
Where the hell is Ken? See, Steve, you'll stand, and he's very quiet about it. He's in here someplace. He just doesn't want to stand. Ken Griffin, Citadel. What a guy he is. Where are you, Ken? Where the hell is he? He's trying to hide some of his money.
He knows. Trump knows exactly what's going on there. And they've called out now DJT CEO Devin Nunes and new upcoming FBI Director Kash Patel have literally come out and spoken about market manipulation and that they're investigating major players and market makers for market manipulation. And I think that there's going to be some big reforms here in regards to, literally in regards to naked shorting and many other nefarious practices. We have, as I've told you guys before, I've literally personally worked with the RFK Jr. administration in helping to craft ideas for financial reform. And I'm very bullish on some of those being implemented here in the near future. For the first time in 779 days, the 10-year over 3-month yield curve inversion has finally disinverted. 779 days it took for the yield curve inversion to become uninverted. The word for that is disinverted. This is the longest inversion streak that we have seen since 1929, ladies and gentlemen. The worst inversion streak seen in 100 years. What does that tell you is coming next? And for those of you that may not understand what this means, the recession and the market crash always happens after the yield curve inverts and then uninverts. And this was the longest the yield curve had ever been inverted, 779 days, since the crash of 1929. Crude oil prices are officially back above $70. And the problem is that demand for oil is plummeting. The demand for oil is plummeting and the price is still increasing. We are heading into the new year here, and all three major metrics of inflation are increasing: CPI, PPI, and PCE. Wage growth is reaccelerating, but core inflation is accelerating faster than wage growth, which is above 3%. The Fed began rate cuts with 50 basis points for the first time since 2008 in the exact same month this year. Next week, the Fed is going to implement their 100th basis point of interest rate cuts this year. They're going to cut 25 basis points to make that 1 full percentage drop. Why in the world would the Fed cut if inflation is increasing? Why in the world would, you see here, this was the highs we were seeing on inflation. It started to dip back down. The Fed cut here in, I believe it was July. Then we saw the downtick in August and September. And then, of course, back since September, we've seen October and November increasing. And we are currently seeing not a small increase, but a massive increase in these three measures, PPI, CPI, and PCE. And this month alone, November, this last month, because they're a month behind, right? So the CPI just came out today, and PPI, the Producer Price Index, for food is literally up by 31%. Again, keep in mind, guys, this is not a little problem. And the mainstream media is finally finding out about it.
Lindsay.
Yeah, so...
Okay, I have to interrupt. For some reason, I've never seen this before. Finished consumer foods, crude, up 31% month to month, if I'm not reading this wrong.
Finished consumer crude.
I don't even know what that means, 31%, if that's a misprint or something, but...
Well, it was definitely not a misprint. I showed you guys that here on this chart, and then I also showed you on the Bureau of Labor Statistics that finished consumer foods, both processed and crude, is up massively. And on top of that, we can actually go to the definition, which is down here at the bottom. Finished consumer foods processed contains prepared food products that go directly to the consumer. Examples of processed finished foods includes bread, milk, and related products, candy, nuts, carbonated drinks. And then crude stands for basic food products such as fruits and vegetables that are used in an unprocessed state by the consumer. So finished foods being up 31% means that you're going to, that's month over month, by the way, not year over year. So what you're seeing on this chart here, this is PPI for final demand. This is all inflation combined, not just foods. If this was just food, this would be through the roof. But of course, as you can see here, I cannot pull that up. The producer price index for finished foods does not come up on the labor statistics chart because they don't want us to see those. They do not want you guys to see that on a rolling chart basis because it's terrifying. It's terrifying. They will show you the others, like all as a whole, but not just the singular food inflation that you're seeing here on my chart now. Could you imagine how high that bar would be if we were actually seeing that? It'd be massive. Carolette, welcome to the channel. Check this out. The delinquency rates for multifamily housing is at levels we have not seen since the great financial crisis, the global financial crisis that we saw in 08, 09, 2010. And the defaults then happened after the housing market crash because it continued to crash for multiple years after the situation of 2008. And right now we're looking at levels that we haven't seen in delinquency rates for multifamily housing through Freddie Mac. For those of you that are unaware, Freddie Mac, Fannie Mae are government-backed loans. Government-backed loans to regular people and institutions. A multifamily housing means anything with 2 or more families. So duplexes, 3 flats, 4 flats, and other apartment buildings. They are in serious delinquency. And these gray bars for recessions that you see here are always added after the fact. The recession bars never show up during the recession. The Fed always comes in and revises the data after, just like they revised inflation up for the last six of the last 7 months. They revised inflation. They're revising the jobs data. They're revising the unemployment data. This continues to happen. This is not something that's exclusive to the United States. This is the China Real Estate Total Return Index. To put things into perspectives, what's happening here in the United States now is already happened in China. This is real estate in China from 2021 through today. In the last 3 years, real estate sector in China is down 82%. 82% drop in the real estate total return index over the last 2.5 years. And of course, as we heard on this channel, we were breaking news before anybody else on social media, before anybody else in mainstream media. We had Dr. Marco Metzler here on this channel. Him and I did due diligence together for months before we got the chance to meet and actually do a video together. Evergrande, the second or third largest property developer in China, filed for Chapter 15 bankruptcy. And the real estate demand in China has collapsed with the deflation that they're currently seeing. They're facing the longest period of deflation since 1999. And not even 2008 had 5 straight quarters of deflation for China. Everyone else is fighting inflation right now, and China's dealing with severe deflation because things are happening there before they happen in the rest of the world right now, because their markets were so overvalued and things are already falling apart there. We're kind of lucky that things are still stabilized for now. Take a look at the bankruptcy filings. These are the bankruptcy filings for United States companies, large companies that we have not seen in the last 14 years. Since 2010, we have not had 634 bankruptcy filings in 1 year for these massive companies. I'm not talking small businesses. I'm talking about the biggest companies in the United States. I believe over $100 million valuations in these companies. And we're seeing it continue to happen. There have been 32 more bankruptcies this year than there was during the 2020 scamdemic lockdowns. 32 more bankruptcies this year than there were during the scamdemic. What do you guys think that means? Typo Negative says healthy financial markets is more like broken criminal Ponzi schemes. Yeah. I would say that's probably pretty spot on. Let me get this so you can see what it says at the top. Last month alone, November, there was 69 large firms that filed for bankruptcy. That's the second highest we've seen in a month since July of 2020, since the scamdemic. Consumer discretionary companies saw the highest number of filings of bankruptcy this year. There's been 99. And then 79 industrial companies and 62 healthcare companies have filed bankruptcy this year alone. Again, we have not seen this happen since 2010, when the GFC was at its peak, when the housing collapse that we just talked about was at its peak. And guess what else was the highest since 2010 and 2012? The delinquency rate of multifamily housing and the delinquency rate in commercial real estate and U.S. bankruptcy filings by year. We are at recessionary levels for bankruptcies right now. The ratio between Americans that are transitioning between unemployment to employment to the hiring rate fell to the lowest levels we've seen since the scamdemic. And we have never had such a rapid drop without a recession. Bankruptcies are already at recession levels. And what happens if a recession begins and interest rates head higher to levels that we haven't seen in decades? Because, as I told you guys, inflation is going through the roof once again. So for now, the Fed is going to continue cuts. And what's going to happen when the Fed continues cuts? Well, this red bar showing PPI and CPI and PCE, they're going to go higher and higher and higher and be similar to that. We are looking at a repeat of the 1970s right now, and it is happening on purpose. It is being orchestrated by the Federal Reserve and the elites in the world. This is a big deal, you guys. This is a really big problem for the global economy and the United States. And now, China, as I showed you guys here on this other one, is spending billions and billions of dollars to prop up their own markets because things are collapsing. Take a look at the initial jobless claims here, circled in red by Kobesai Letter. Kobesai Letter asked, has the era of stagflation begun? We've been telling you guys this for a long time. Stagflation is here. That means that the economy is stagnant and inflation is increasing. The initial jobless claims were revised higher for the month of October by 17,000 to 242,000 by last week. So the non-seasonally adjusted claims skyrocketed by 100,000 jobs, and that's the highest we've seen since January. This is a 30% year-over-year increase in jobless claims, in unemployment claims. And keep in mind, anybody who was called on this survey by the Bureau of Labor Statistics and has not been searching for a job in more than 4 weeks, for whatever reason, say they've been out of work for 4.5 weeks or 5 weeks and they haven't actively applied to a job in 5 weeks, they do not count as unemployed. They do not count as unemployed. So if you've been out of a job for 5 weeks or more and you have not applied for a job in the last 4 weeks, they don't count you as unemployed. They count you as out of the workforce. And that allows the United States government, the Biden-Harris administration, to pretend that unemployment is not as bad as it is, and artificially skew the numbers to hide the recession indicators and signals from the American people. Because all of the institutions already know about these tricks. They know exactly what's going on. Big money, big banks, and they're pretending that it's not happening because they're raking in the money. They're bringing more people into financial markets so they can continue to churn and churn the Ponzi scheme further and further. The number of people receiving unemployment and jobless benefits surged to 1.9 million people, 1,900,000 people. This is a 3-year high. And to give you some perspective on this, continuing jobless claims, meaning people that are renewing their unemployment, is now 14% higher than it was before the scamdemic. 14% higher than it was before the scamdemic. So meanwhile, we got core inflation, producer price inflation, and PCE are all increasing. We have a weakening labor market, rising inflation, a weakening housing market, and the Federal Reserve is about to cut once more. What is that going to do? Put more people out of work, put more people out of homes, make sure that homes continue to be more unaffordable, make sure that the price of food and all the other goods continues to increase. This is not a good sign for the majority of people, my friends. And I hate to say this, but the whole point of this is to give you guys a heads up on what is coming. This is happening. This is here. And if you're in good shape and you are looking for things to invest in, well, let's put it this way. Tangible assets are king. We're looking at silver and gold having so much potential, and compared to the relative value of silver and gold, along with that value of the S&P 500 right now, they are extremely undervalued in comparison. The historical ratio is about 2.7x in the value of the S&P to silver and gold, and that currently stands at 0.44. That means that there are incredibly good deals in relation to the stock market. And not to mention they are tangible. When the shit hits the fan, it's really hard to sell someone or trade someone crypto and your stocks, but it's really easy to give them a piece of silver. It's really easy to give them a piece of gold when you need to buy something. Now, I'm not saying that's going to happen tomorrow. Markets are going to continue to roar higher, but we don't know for how long, and we don't know just how volatile they're going to be because they're going to get extremely volatile. Let's put it that way. And what we're seeing here with these numbers is absolutely astronomical in these bankruptcy filings, in the housing defaults, in inflation, CPI, PCE, PPI, in the jobless claims, in unemployment claims, in jobless benefits. The price of oil is increasing even though demand is dropping. The yield curve is disinverted for the first time in 779 days. That's the longest we've seen since 1929. These are huge issues that are going to affect the majority of, that's going to affect everybody. But those that are not in the top 10% of income of Americans are the ones that are going to struggle the most. Now, what are good investments in these cases? Tangible assets. And where could you put your money if you don't feel comfortable in putting it into the stock market or in the crypto markets or in real estate? Well, my friends, Silver and gold, I'm not a financial advisor, and this is not financial advice, but go do your own due diligence, and you will see that silver and gold are extremely undervalued in comparison to the S&P, to the NASDAQ, to the NYSE, et cetera, and to cryptocurrencies in general, Bitcoin, et cetera. Also, if you have money to invest, you should look into something called private equity. Those are companies now that are currently being built up to IPO in the future when things stabilize, or after a crash, or after a readjustment of the current financial bubbles. And if you're interested in that, you guys can go to litexchange.com, and you guys can have the opportunity for the first time in the history of the world to actually own an upcoming stock and crypto brokerage, pre-launch and pre-IPO. So you guys can take a look at that, do your own due diligence. So far, retail invest, you can find our SEC Edgar filings linked from our website there. You can go to the FINRA approved funding portal and broker-dealer, Silicon Prairie, in order to invest in the company, should you choose to do so. So far, retail investors have invested over $500,000 in a very short period of time in the company, and we have spent absolutely $0 on advertising. So pretty soon we will start advertising this, and we've already reached our goal. Now we're going for our stretch goal, and eventually this will not be open to the retail investor any longer. So if you're not interested in currently investing in overvalued stocks and cryptocurrencies and real estate, you should look into private equity, somewhere where you can keep money safe for a couple of years. Naturally, there are risks involved, but my partner and I each individually have over 20 years experience building up multiple 7- and 8-figure businesses, and Lit Exchange will be our first 9- and 10-figure business. So you have the opportunity to get on that pre-launch and pre-IPO. There are thousands of people already signed up. There are hundreds of people already investing in Lit Exchange, private equity. For the first time in history, we are offering any stock and crypto brokerage. We are offering retail, you, the opportunity to own a piece of the company. This has never been done before, because these companies, these brokerages, for example, like Robinhood, for example, when they had their pre-seed round, they didn't want to give retail investors the opportunity, and as a matter of fact, they probably couldn't. They could have if they would have done a Reg D offering, but now with a Reg C offering available through the Jobs Act via Donald Trump's Jobs Act, you do have that opportunity. So that being the case, you have somewhere where you can feel a little bit more comfortable for the long term than watching stocks or crypto or real estate be devalued. So thank you again, ladies and gentlemen. I wish you peace and wealth. Have a great day. Giles, Maynard, Jana, I appreciate you very much. Yeah, Jana, you're right. Lit Exchange is a game changer. And it is the opportunity of a lifetime, because literally no stock or crypto brokerage has ever given retail the opportunity to own a part of the company via a Reg CF crowdfunding campaign. So thank you again, ladies and gentlemen. I wish you peace and wealth. Have a great rest of your evening. We'll be back tomorrow with another update. Thank you, Rachel, K. Joshua, Jana, Giles, Maynard, Quant Trades. Huge shout out to you, Typo Neg, Badonkey Kong, Tyler, and everybody else who is a supporter of Lit Exchange. Myself, a channel member. Really appreciate all of you, ladies and gentlemen. Native Gamer, you can go to litexchange.com and you can input your email address, and you will be ready. Those that are on our email list will be the first to receive. Will be the second to receive the opportunity to sign up for Lit Exchange. The first people that have the opportunity to sign up for Lit Exchange upon our launch in the very near future are founding members, founding investors that have invested in the company through our Regulation CF crowdfunding campaign. So join the Founders Program if you are looking to invest in the company. And if you cannot afford to do so, by all means, please go ahead to litexchange.com, and you can then just input your email address, and we'll reach out to you once we start offering people the opportunity to do beta testing and to actually sign up for the upcoming stock and crypto brokerage lit exchange. We have been in the development stage for over 38 months now, and we are very excited to move forward to the next stages here in the very near future. Thank you again as well, Lion Man, Native, Quant, Rachel. Have a great evening.